Hey guys, welcome to another video and thanks for clicking on this one. In this video, let's talk about what we can expect with the Fed's FOMC interest rate decision that comes out on Wednesday. The common analysis and number out there is about a quarter basis point, and that is something, especially when we've sat at this high interest rate regime for some time. Now, what we are seeing and what the market is actually saying is that we do have to think about what happens next after this decision is made, or at least the announcement is made. As we have seen in the stock market has actually risen for the past couple of weeks. Why? Because of the numbers that have been coming out with the jobs reports, the CPI, the PPI numbers, and all of that has really pointed that the Feds will have to make a decision on dropping the rates by a little bit. Now, with that said, we do have some things to consider, all right, as we go forward. The first thing that we have to think about is there is some elevated pressure in the market with not just the high interest rate, but we have inflation still lingering, and in fact, it's slowly ticking higher. And with that said, we need to still worry about the impact of tariffs over the course of months and years to come. And that means, we may continue to see this uptick in inflation, but we may not see a drastic drop in interest rates because, again, the Fed will need to balance this too. Now, here's something that I would like to share with you that you should see. It says here, what could come after interest rate cuts this week? All right. After 9 months of standing pat, the Federal Reserve is set to offer some interest rate relief on Wednesday. The open question is, what hints are on offer about what comes next? And it's in the big picture. We have rapidly deteriorating job growth is solidified support for a quarter point interest rate adjustment among Fed officials. But with price pressure still elevated, some will be reluctant to indicate much more monetary easing from here. And that is something that I already mentioned. But the second one says new quarterly projections out Wednesday will shed light on the range of opinion and how much consensus there is behind additional rate cuts this year. So we may see further rate cuts this year, but that would also depend on what numbers the jobs brings out, or the job reports, and of course CPI and PPI numbers as well. Those will really say a lot. The next thing also is this is a flashback. In the last round of projections issued in June, the median official anticipated 2 rate cuts in the second half of the year, but there was a wide range of opinion, including 7 officials out of 19 who didn't think any rate cuts will be justified. Since then, inflation has proceeded broadly as expected, but job creation has taken a major step down, clearing the way for more consensus among policymakers that it's time to make monetary policy less restrictive. Now, it says, yes, but the new projections will show the balance of opinion on Federal Open Market Committee between those who see 1 or 2 tactical rate cuts as justified and those who believe a more protracted easing cycle is warranted to deliver a jolt of monetary stimulus. Now, I'm of the opinion that the FOMC or the committee will likely want to take this slow pace, because what is the point of rushing to drop interest rates and then see that inflation keeps running high? That is not what we want. We don't want to go back to that high inflation regime at all. The goal is to get it down, and if we want to get it down, what we need to do is, according to the Fed, at least keep interest rates a little higher. Considering they will make some move to drop it slightly, I am of the opinion that they will likely want to see more data. Now, there's room for maybe 2 rate cuts. This one that we'll see most likely on Wednesday, and maybe 1 more. That is what I'm thinking this year. Another quarter basis point sometime later this year, unless something drastically changes. Otherwise, I don't really see them rushing to drop interest rates so quickly. Now, with all of this, right, the stock market has already been pricing in some of these numbers. And it's not far-fetched, even if you check the stock market, for example, the Dow Jones, S&P 500, NASDAQ, all the indexes, they've all picked up steam in the past couple of weeks. One of the ones that you would see is, of course, the Dow Jones. As you can see, we're reaching an all-time high again, about 40. That was on the, I think it was on Friday, on the 10th, right? Maybe Thursday. We reached an all-time high of around 46,000, right, points. Yep. And if you check the S&P 500 as well, similar numbers. If you check the NASDAQ as well, similar numbers. And all of this is just pointing that, you know, the stock market is still showing that it has a lot of energy and steam in it, because even with the S&P 500, the projection is that we're likely to get to 7,000 points. And here's the S&P 500 as of today. We made a new 52-week high as of today. And here's it. We can see that was around, I can't see what that number was specifically, but, you know, we'll say around 6,600. That is a lot. All these numbers are showing that stock market keeps getting steam. This was the April Liberation Day announcement down here, as you can see, and we've made a nice recovery all the way up. So what does this even mean? All of the things I've been saying. One of the things that we need to consider is, how are we investing our money? All right. The first question is, if you want more risk, you have to take, if you want more rewards, you have to take more risk, generally speaking. And putting money in a savings account in an environment where they're dropping interest rates may not be the right move. Now, it's good to still have your emergency fund saved in a safe place, right? But when it comes to your investments really growing, you want your money in the fastest, well, moving vehicle that is also not too risky. Now, depending on your tolerance, depending on your age, depending on your goals, yes, you can move this money around depending on what you're trying to achieve. But generally speaking, if you're investing for the long term, your goal is to be in the market at all times, and maybe even keep some money that you can invest when you find great opportunities. A great opportunity was during the Liberation Day announcement, when the market dropped significantly. And if you had, let's say, a $5,000 extra or $10,000 extra that you can put in the market at that time, guess what? That 10,000 could be around 15,000 now, right? And that's because the market has really recovered since then. So my advice is, of course, you know, do your own research, do your own due diligence. Understand that the future isn't guaranteed with all these interest rate cuts, but being in the market, investing on a regular basis will definitely help. As we can see, Tesla in a few days has gained a lot, all right? And that's always obviously because of some of the moves that the CEO just made, Elon Musk. And the thing is, nobody could have predicted that. It's something that happened out of the blues overnight because the news came out this morning. It was something that happened on Friday. We don't know what moves will come out in the next few weeks. Same thing with some of these companies that are doing well. One company that I'm looking at right now is Texas Instruments. It's dropped significantly in the past couple of days. And it's not because there's anything really crazy going on, but it's just the market. And I see an opportunity. If I see that stock at around 160 or below, then that is something that I will consider adding to my portfolio. But for now, it's something that I'm watching. And I thought I should share this with you. Of course, if you found value in this one, don't forget to drop a like on the video. And I'd love to see you in a future one.